I think the important thing is the sense that we have left the negative numbers behind.
Investors are optimistic with more positive signs today that the economy may be trending up. The Commerce Department report today showing that the gross domestic product rose at an annual rate of 3.5% in the third quarter. Other hopeful signs include consumer spending that was up more than 3% in the third quarter, and the number of Americans looking for work continues to drop, albeit slightly. All that good news is surpassing economic analysts' expectations by a little bit, but is it proof that we're finally emerging from this recession? Joining me now with more in the markets, Bernie Anderson with Summit Brokerage. Bernie, thanks for your time tonight. Is this a blip or is it the real deal?
Well, the markets would tell you, as they responded today, that it is the real deal. But whether or not it lasts after we see how much government spending and government stimulus there's actually been, I would tend to say the jury may still be out.
You argue that the government did a significant amount of goosing of the economy in that third quarter, and that's why we saw that bump. Had it not been for some of the incentives, the stimulus money, the tax credits, we wouldn't be here today.
Chances are we wouldn't be talking about a market that responded the way it did, and we certainly wouldn't be looking at a 3.5% increase.
You say things will improve, but they may improve sideways. Explain that a little bit.
Well, it takes a while to work out of the type of a recession that we've had, and certainly as we're taking out the type of a debt bubble that we have, some of the fuel that would normally fuel an economic recovery is just not going to be there in the future quarters. And so without some of the government stimulus, we're going to be looking at a far more placid and certainly a far more normal economic growth that will likely go in a range between the highs that we're at right now and certainly perhaps not as low as we once were.
What's your suggestion for investors who may be sitting on the sidelines right now and they see the numbers like today, hey, it's up 200 points, it may be time to get back into this market. Do they need to be careful? This thing, we're still not out of the woods yet. This hasn't gone away.
No, so a number of the very significant forecasters that we follow, people like Bill Gross from PIMCO, Nouriel Roubini from the University in New York University, are still suggesting that there is some rough patches ahead and that without the government stimulus we're going to be going slowly. I don't think anyone needs to be in a hurry looking for their bargains today. We've got 3 months, 6 months, possibly up to a year in which to find the good places to put your money.
All right.
And certainly with interest rates as low as they are, nobody's anxious to go buying a CD right now.
Not right now. Bernie Anderson with Summit Brokerage. Bernie, we appreciate your analysis. Thanks for your time today.
Thank you.